Hi, my name's Elliot Falconer. I'm the CEO of the team group of Harcourt's offices in the Wellington region. A lot of people have asked me recently what's happening to the real estate market. And if you look throughout 2013 on the graphs showing the volume of sales, in the beginning of the year and right through to May, we had volumes exceeding the last 5 years of turnover by quite a substantial amount. In June and then in July, again, there was a significant drop down. And that, compared to the commentary on how the market's going, was not reflective. I think the problem in Wellington and why the sales volumes dropped so much is very much one of stock. The stock levels nationally are at a very low level, down to some 24 weeks of stock available to sell at any one time. In Wellington, we're right down to 18 weeks of stock to sell, which is a very low level for us. Although the volumes of sales have dropped, we've noticed that the prices of houses haven't dropped. The prices have stayed very consistent, and with 1 or 2% of both last month and last year. So in Wellington, the price is staying the same, but we've seen with the shortage of stock that some houses are creating competitive bidding or competitive negotiation at the end with multiple buyers, and the prices are starting to rise. The real estate market is one of supply and demand. If you have a low supply and a high demand, which is what we do at the moment, that's very much what we call a seller's market. In a seller's market, there are an abundance of buyers and there is an opportunity to achieve a premium price. Traditionally, at the end of the year, September until the middle of October are a quiet 6-week period, and then through middle of October till middle of December, the volumes rise right up. I think this year, that as well as the time of year considerations with the weather, houses looking at their best, people making a decision to sell by the end of the year, transfers coming by the end of the year, there are also some economic factors at the moment that are going to mean that September into the beginning of October is probably going to be better. The question is, do we wait till November to take advantage of that? And in November, we've got factors such as it being the end of the year and a lot of people wanting to shift by the end of the year. It's coming into summer, so houses are looking at their best and it's all warmer and people feel happier. And a lot of people want to make a decision around that time of year. So do we wait till then, or is this year a wee bit different? Where this year, because of the economic factors, because of the Reserve Bank putting their restrictions in place last night, as of the 1st of October they'll come into place, there'll be less buyers in the first home buyers range, in the lower end of the market. And that will have a flow on for those people being able to sell and then trade up further into the market. And so this year, compared to other years, we're picking that September will actually be quite strong because there are buyers who really want to buy. And particularly if they've got a less than 20% deposit, there is some urgency on them to do so. We've also got the threat of higher interest rates later in the year, which may not happen based on this new policy, but still we're very much affected by the Auckland market. So it could be that the interest rates also climb later. So if you were ready to sell before Christmas, my suggestion would be that now, between now and the middle of October, we will have a bubble, and then we'll have the traditional October till December bubble. So we've got 2 opportunities between now and Christmas. The thing is picking which one best suits you to get a result. So if you are looking to sell between now and Christmas, remember the 3 key things. First of all, don't put a price on the house. If you market the property based on its features, then the buyers will decide what the value is compared to the other properties they've seen, and you won't put anyone off by having the wrong price to start with. The second thing is raise your marketing, raise your advertising sizes. We know that the bigger the ads, the more people come, and if you're giving yourself a time frame within the market to achieve a result, make sure everyone knows you're there. So really choose wisely in where you invest your money to profile your property. And the third thing is have a cut-off date. Having a cut-off date at the end of a marketing program just gives buyers a date which they have to focus on to buy the property. And hopefully if you've got more than one buyer at that stage, then you can create competition, and competition will drive the price up, which is how you receive a premium price. Ladies and gentlemen, I wish you all the best of luck between now and Christmas time, and thank you very much for watching. Goodbye.